Very good morning, everyone. Dr. Jamaluddin Nasir, working as assistant professor in the Department of Commerce, Indian University, Lucknow. Today, I'm about to start a introductory part of accounting, and we will discuss the concept of accounting in this lecture, that why the concept has been originated, and what are the significance of this concept, and what exactly these accounting does it mean. So these lecture consist of the following topics: that introduction to accounting, meaning of accounting, importance of accounting, branches of accounting, accounting principles and standard, accounting cycle, financial statement, accounting concept and conventions, accounting software, careers, opportunities in accounting, financial statement, balance sheet, income statement, cash flow statement, and we further to talking about accounting information system, as well as the cost accounting and managerial accounting, ethics and regulation in accounting. So these basically, if we're talking about the accounting, and as you know, accounting is about scientific branch of the business, which is talking about recording of the financial transaction only in a systematic and in a scientific way. So accounting is the language of the business. It's a system for recording, classifying, summarizing, and reporting the financial transactions of the business. By analyzing these information, business can make information decisions about their operation and future plans. So when we go to the meaning of the accounting, we mean that how in this present era the companies, corporate firms across the world getting the importance, getting the advantages of the accounting information for the purpose of decision making. So, in a nutshell, you can say, in a broad way, you can say that accounting, simply talking about accounting, it means that is a what systematic branch of the education, right? The systematic way of recording the transactions, only and only financial transactions, right? It have a lot of process, right? Earlier we have the concept of bookkeeping, where businessman used to record the business transaction on on a rough on a it's a pretty note. Does not have any math, does not have any significance, does not have any importance in the eyes of law. So later on, we have developed the concept of accounting, where some expertise is required, where some kinds of some fundamentals knowledge of accounting is required to perform the task of accounting. So accounting basically talking about is a systematic way of recording the financial transactions in a systematic way. So when we moving towards what is accounting, so as I told you, is a process that involves identifying, measuring, recording, and communicating financial information, and is a crucial function for any business. It helps to track its financial performance, manage resources, and make information decisions. And accounting is often referred as the language of the business, because in these accounting provides all kinds of financial information to the businessman for the decision making purposes, and its main motive is just to identifying the nature of the account and its measurement, as well as recording for the purpose of decision making and communicating to the stakeholders, those who are interested in the company, right? So when you're talking about the financial accounting, like furthermore, so it provided common framework, a conceptual framework for understanding financial information. And financial accounting, this area focuses on the preparing financial statement for external user like investor, creditors, and regulator bodies, just like government, state government, central government, and various agencies, those who are monitoring, just like SEBI, and many more international agencies are too, who are always interested to know the financial position as well as financial result of the company. So financial statement provide a summary of a company financial performance and position. When we're talking further, its various classifications. So one of the most important classifications of these these financial accounting or accounting is the management accounting. So its name clarify one thing here that accounting means management accounting provide financial information to internal users just like manager, executive, CEO, director, board of directors, president of the company, and departmental heads. It helps them to make operational decision and track information, right? So, when we're talking about this concept of this accounting, right? So, it basically signifies that how the concept of accounting help for the decision making purposes से how it helping कैसे help करता है this accounting. Similarly, when we moving towards the furthermore its classification, so there are a number of classification of accounting, just like financial accounting, management accounting, taxation accounting, and human resource accounting. Now, this some important concept has been originated, just like forensic accounting too, right? So there are a number of classification of accounting. So when we're talking about what the its role play means importance of accounting, so it play a vital role in the success of any business organization, right? It provides valuable insight into the financial health, performance, and future potential. Here are some few points we want to discuss with you on why accounting is so important. First, financial reporting. Basically, accounting provides a transparent and standardized way to report financial information, enabling stakeholders to understand the company's performance, profitability, and financial stability. Just like if we talk about the financial performance of these Hindustan Unilever, so we would like to invest towards this part. What about the financial performance of this Hindustan Unilever company have millions turnover every year and have very sound financial position, right? So the most important task of this accounting is to provide financial reporting by way of all kinds of transactions which are taking place in business day and night 24 into 7 are recorded in a systematic and scientific way based on certain scientific principle, based on certain scientific way, right? So the user, the stakeholder can get some kinds of meaningful information from the same for the decision making purposes. So these accounting also provide the performance, the profitability, right? Consistently, what about the performance of the company, right? And about what about the stability, financial stability of the company. Similarly, if we're talking about the second importance of the accounting, decision making purposes, the most important things nowadays, right? In every business organization, the success mantra of every business organization is what? The decision making. If a decision made at the right time, at the right place, with the right you know time, so it have lot of impact on the business organization, right? So if we're talking about concept of these the importance of accounting for the purpose of decision making purposes, so financial data from accounting reports helps business make informed decisions about investment, operation, and future strategies. It allows for a data-driven approach to the management. Means this financial information, this accounting provide management and integrated accounting information where all kinds of expenses, incomes are recorded. So management can take necessary decision, impactful decision, and immediate similarly can forecast, right, for the future that what about today's sale, and on the basis of this today's sale they can forecast for the future. So the importance of this accounting in the form in the terms of the decision making have also very significant role. Similarly, we're talking about the third importance of this accounting, so resource management. In fact, no doubt, these accounting system help businesses track and manage their assets, liabilities, and ensure efficient use of the resources, and identifying the potential areas for improvement. Means, if you're talking about whatever uh, uh, the task, right? What about the expenses? What about the income, right? Recorded in the books of account. So it is the task of the accountant, right? And accordingly, the management of the company, the management of these corporate firms can manage its resources, that how to manage assets, how to manage the liability if we are getting continuously the business from getting continuously loan from the outside. So these in a very short way, in a very short span of the time, manage these accounting provide necessary information, right? That how to reduce the liability, how to increase the assets, and how to manage cash flow, right? And similarly, how to make the most important thing, the efficient use of various resources, just like physical, human resource, right? And similarly, find out the unexplored area, right? Means the broader the area is still untouched, so need to be more explorative in nature. And if we're talking about the fourth most important aspect of accounting is the compliance. So businesses must comply with various accounting and tax regulations. Accounting practices help organizations ensure accurate reporting and avoid penalties. The most important part, in my views, about the accounting is how these uh, accounting helps, okay, for the purpose of complying various formalities, just like talking about the taxes. Similarly, talking about the various regularities. So this accounting provides the necessary information, right, by way of this financial affair of this company, that how to comply with the rules and regulations, right? Tax authorities, government, and many more informative, right? Information to the government. So, in there are only few five, two, three, 5 points have been discussed for the purpose of decision making, right? But instead of these, there are also too much importance of the accounting uh, for a firm, for the stakeholder, right? So next we're talking about the what are the classification of the accounting. There are a number of the branches of the accounting. Here only few branches have been classified. It has been divided into various branches, and it's uh, each with its own focus and application. Every branches have different kinds of some kinds of special features, some kinds of special configuration. The main branches of accounting include financial accounting, management accounting, and cost accounting. So what about the task or the area the, of the financial accounting focusing towards only and only preparing financial statement for external as well as internal user, right? So for external user like investor, creditors, regulatory bodies, it provide an overview of the company's financial health and performance. Then similarly, other classification of this accounting is what management accounting, which provide financial information to internal users like manager, executive, and departmental heads. Right? It helps them make informed decisions regarding the operation, pricing, and resources allocation. Right? Whatever the task of the financial accounting ends means by way of preparing financial statement, just like trading profit loss account and the balance sheet in accordance with Indian Companies Act 1956, Amendment 2003, 2004, Schedule 3rd, Part 1 and Part 2, right, for the corporate firms, right. These uh, statements sent to the management for the decision making purposes, like enable whatever is financial positions, financial result, okay, of the particular period of time. If we talk about the financial year 2023-24, right? Within these financial year, quarter one, quarter two, quarter three, quarter four, what about the financial performance of the company? What about the financial profitability? Right? What about the stability of the business? Each and every each and every uh, matters, each and every transaction must clarify in these books of account, right? So these can help management to take the necessary decision, right? So accordingly, they can forecast futures, right? means the pricing decision regarding operation, means operational efficiencies of the firm, right? How to decide the prices of the products, right? And uh, what about the resource allocation? Similarly, we're talking about the third classification of this accounting. So, cost accounting is also one of the most important branch of this accounting, and this branch focuses on the tracking and analyzing the cost associated with the producing goods or services. It helps companies determine the production cost, pricing strategies, and the profitability. So basically, the most important task of this cost accounting, as its name clarify here, cost and accounting. Accounting for the cost of goods manufactured. So this cost accounting is also branch of this accounting which emphasize toward ascertaining the cost of goods manufactured as well as services. So this branch of accounting means cost accounting help the businessman, help the management, right, that deciding the cost, deciding the production cost, right, pricing stability, pricing strategies and the profitability of the company. Other, if you talk about the what are the principles, yeah, as you know, it's a common thing that every branches have some kinds of principles and standards. If you're talking about the medical sciences, have certain rules and regulations. If you're talking about the applied sciences, like just like MC, A is equal to MC square, right? Doctor law and various scientific rules and regulations. So same way, if you're talking about in the domain of the humanities, commerce, management, just like accounting, have also certain fundamental principles, standard, because this is what the based in every branches, every field have its own rules and regulations, its own standard principles. So accounting principles and standard are the rules and guidelines that ensure efficient and accuracy in financial reporting. They provide a common framework for accounting practices, making financial statement more reliable and comparable across different organizations. So there are few have been pointed out, just like principles and accounting standard, CAP, generally accepted accounting principles, uh, used primarily in the United States. India is also using these generally accepted accounting principle, but it's primarily used in the in the United States. Similarly, we have other accounting principle. IFRS, International Financial Reporting Standard, used by most countries outside the India, or outside the United States. Means most of the countries nowadays have adopted the concept of IFRS, right? Except the United States. United States is still working with CAP, generally accepted accounting principle, but rest of the countries have adopted the concept of IFRS because it now is the era of LPG, right? Where number of uh, number of companies doing business across the world. In number of multinational companies are doing business across the world, just like if you talk about the Boeing aviation sector, right? If you talk about the Apple from telecommunicating sector, right? If you talk about the automobile industries like Toyota, right, from Japan, Mercedes from France, like so, these companies are doing business across the world. So in order to avoid all kinds of financial irregularities, so most of the companies have adopted the concept of IFRS. Similarly, accrual accounting recognize revenue when earned and expenses when incurred, regardless of the when cash is received or paid. So these principles talking about that irrespective of receiving of the cash or paid, but when it's recognized or when it earned, it's not a matter at all that when it is not received as well expenses paid. Similarly, other accounting standard principles talking about the matching principles, the matching expenses with the revenue they generate in the same accounting period. Right? And other principles of this accounting too, just like dual aspect, separate entity concept was there. Uh, Furthermore, if we're talking about the concept and the principles of this accounting, just like we have a historical cost concept, money measurement concept, right? Dual aspect means every transaction have debit and credit. So these are the various principles and standard of the user accounting. Then the most important where the numerical part is started, right? Means every branches have some kinds of unique features. The same way accounting have also some unique features. They're talking about the accounting cycle, right? Means is about a systematic process that businesses follow to record, summarize, and report the financial transaction. It involves a series of steps that ensure accuracy and consistency in financial reporting. So first of all, the most important cycle, the first cycle of this accounting, the first step of this accounting cycle is what? Transaction identification. Means you need to identify the transaction, means identifying and classifying financial transactions such as sales has been taken place or purchase of the goods and or payment. For example, if we talk about the transaction identification of the transaction or transaction identification, so let me take one of the examples really to understand the concept of accounting cycle. Purchase goods amounting to rupees 10,000 from XYZ private limited. So it is about the financial transaction. Why it is financial transaction? It impacts toward the financial aspect. Right? Means you have purchased the goods amounted to rupees 10,000. The name of the parties was given XYZ private limited. It means it's about you need to first identify the transaction, right? Identifying and classifying the transaction means in which account should be placed. In this here, in this example, what happens is checking the purchase goods amounted to rupees 10,000 from XYZ Private Limited. There are one of the party, right? XYZ Private Limited, right? It is a what? Not a natural person, it is artificial person from where we have purchased the goods amounted to rupees 10,000. So in this case, purchase account here will be debited to XYZ private limited amounted to rupees 10,000. So as far as accounting concept is concerned, the most important cycle of this accounting is the first identifying the transaction. Then other second cycle is talking about generalizing, means recording the transaction in a general, which act as a chronological record of the financial events. Means, as just like I told you, first you need to identify the transaction and accordingly you are going to record the financial transaction in the books of account based on certain rules and regulations. Right? What are the rules and regulations? There are certain universal golden rule of these generalizing. First, there are three classification of account. First, personal account. Second, nominal account. Sorry, first personal account. Second, real account. Third, nominal account. So personal account means the name of the individual, the name of the artificial person, just like Reliance, Apple, Tata, Adani. This is what the name of the natural person, sorry, artificial person. These are the companies. If you talk about the natural person, Ram, Rahim, Kareem, right? So it's have this personal account have rules. And what are the universal rule, golden rule? Debit, the receiver, credit, the giver. This is also the rule which we call the rule of journal entry, the generalizing. Once the transaction took place, then you need to go for the generalizing. Record the transaction in the books of accounts, and that is the primary books of account is the journal entries where the necessary entries are recorded in a chronological order, means day wise, systematic way, scientific way, not as per your own way. No, you have to record the transaction in a scientific way, right? Then other classification of account is the real account, means business expenses, business assets and liabilities. For example, purchase furniture amounted to rupees 10,000. It's golden rule. The golden rule of these real account is receive debit what comes in, credit what goes out. Means here amount purchase of furniture amounted to rupees 10,000 from XYZ private limited. It means here something inside, something go outside, right? What comes in? Furniture, it will be debit, furniture account debit DR to XYZ private limited amount of rupees 10,000. This is what the general increase of the transaction. Similarly, if we talk about the third classification of the account, nominal account means all kinds of business expenses, losses recorded, all kinds of gains and incomes are recorded in separate books in a separate manner. This is what called nominal account. The golden rule of these nominal accounts is all the expenses and losses will be debit, all the incomes and gains will be the credit. For example, amount 10,000, wages paid amounted to rupees 10,000. So it is one kind of expenses. You need to record in the books of account, right? It is a business transaction and single paisa is important in the business for decision making purposes. You are doing the business and you have to record this transaction in a very sound way, and there must be a strong mechanism of the control too, right? So that entry of this transaction account will be the entry, the journal entries of this transaction will be wages, the wages account dr to cash amounted to rupees 10,000. These are what the financial transaction. So now that second cycle of this account is completely over, journal entries. After that, these uh, entries posted to various ledger. Ledger is what? What is ledger? Ledger is a book in which necessary accounts are open. Transferring information from journal to ledger is called posting, and organizes transaction by account type just like assets, liabilities, equity, revenue, expenses. Means whatever the transaction in the business has taken place, just classifying them that what about the asset, what types of expenses you have made for the acquisition of the asset, for inventory or whatever. Similarly, if any expenses you have, if you have any expenses you have paid, so this will be called in systematic and scientific way. If it's sale made, right, or sale of assets, sale of goods, and so on and so forth. So the you need to regard in a scientific way, right? So the third cycle is what laser means. General entries have been posted towards the laser, and the next cycle of this accounting is trial balance. The most important part of this accounting cycle is about trial balance. Trial balance is what is a summary of all accounts and their balances used to ensure the accounting equation assets is equal to liabilities plus equity, either balance or not. Means the debit side of the trial balance is equal to credit side or not. If not, means you need to go rectify where the increase has been taken, has been recorded in a wrong manner, or some digit has been left, some digit has been omitted to record, right? So this trial balance is what prepared to check the mathematical accuracy both in terms of debit and left credit. We must debit is equal to credit and assets is equal to liabilities plus equity. If there will be any kinds of differences between left and right means as debit and less credit, so it needs to be rectified immediately, and the trial balance the most important aspect of the trial balance is just to identifying the errors. Means before going to further before moving towards the other aspects, right? Other step of accounting cycle, if any kinds of irregularities or any kinds of mistake, or if any kinds of if any kinds of mistake or errors has been taken while preparing journal entries or posting from journal to ledger, these journal trial balance immediately going to reveal, immediately going to impact, immediately going to show you that there is some kinds of mismatch between credit side as well as debit side. So you need to rectify the most important thing, the most importance of this trial balance is to check the mathematical accuracy by your debit and less credit. Both debit side equal or not. Then if we moving if we moving toward the other part of this trial balance, right? So the most important thing is what financial statement means, final account of the transaction, trading and profit loss account, as well as the balance sheet. The most importance of the most important part of this accounting is what preparing trading and profit loss account and the balance sheet. They combinedly known as the financial the final account of the firm, means preparing the key financial statements such as balance sheet, income statement, and statement of cash flow to report on company's financial performance as well as position. So, in a nutshell, just let me summarize the most important task of these accounting cycle. First, the transaction should be in financial nature, then after increase, right? Once you identify the nature of the transaction, you need to prepare the journal entries, and after these it goes to the ledger, various ledgers, like various accounts is going to be open, and once the balances of all the account is closed at the end of the financial year, or at the end of the year, at the end of the month, or at the end of the week, as per the requirement, per the policies of the company, you need to prepare the trial balance, the third cycle of accounting, which enables the mathematical accuracy, both debit as well as credit equal or not. Then after, the most important part of these accounting cycle is just to prepare trading and profit loss account and the balance sheet. Now, let me tell you one more thing here. If you interested to know that trading and profit loss account is prepared to know the financial result of the company, right? As and balance sheet is prepared to know the financial position of the company by way of assets and liabilities. So these two documents are prepared to know the financial financial performance, financial result, financial position of the company. Moving toward next thing, the financial statement, right? So is about the formal report that summarizes the company's financial performance and position. So these statements provide valuable insight to the stakeholder, helping them understand the company financial health, profitability, and future prospect. The three main financial statements, right, is balance sheet, income statement, financial statement of cash flow. These two are important. These three most important financial statement, where the stakeholder, right, taking the necessary decision, right, and evaluating the financial position, financial result of the company. The first thing is the balance sheet. These statements show the company's assets, liabilities, and equity at a specific point in time. Means, what about the financial position of the company on 31st March 2010, 2020, 2011, and so on, so forth, right? So the balance sheet enable the stakeholder the financial position by way of assets and liabilities. If assets is more compared to liabilities, it means the soundness of the firm is very good. Means what is the liquidity of the uh, solvency position of the firm very sound. Good meet out means the company is sound enough to meet out its debt, external debt or internal debt. If vice versa, company has more liabilities compared to assets, it's dangerous. A red signal for the companies, and for companies have the management of the company have to take immediate actions, right, just to lower down the liabilities and increase the asset. So, other statement talk about the financial statement, income statement. The income statement, also known as the profit and loss account, shows the company's revenue, expenses, and net income or loss over a specific period of time. Means these is prepared, these document, these the income statement means sharing of loss account is prepared to know the financial result of the company. Means what about your expenses, losses, revenues, gains during a particular period of time, during a duration of 12 months, right? So it's called the income statement. The document which tell you the financial result of the companies by way of profit or loss is known as the income statement. Then the third statement we talked about, statement of cash flow. These statements show how cash has moved into and out of a company during a specific period. It provides insight into a company's liquidity and its ability to generate cash. This is the most important document, the statement of any corporate form, statement of cash flow. Basically it's tells that during the specific period of time, like how the company liquidity and ability to generate cash. Then, as I told you, accounting, these every branches have certain rules and regulations. Accounting to have certain, fundamental doctrine set of these fundamental, doctrine set of guidelines, set of rules and regulations. So, accounting concept and convention are a set of principles that guide accounting practices and ensure consistency in financial reporting. These principles help to ensure that financial statements are prepared using a common framework, making them more reliable and comparable across different organizations. So, the first and most important is what concept as a conventional going concern concept, that as per this concept talking about business will continue operate for stable features, justifying the valuation of assets and liabilities based on their ongoing use. Means you're not suppose that today you have started the business and tomorrow you are going to close the business. No. We assume that it must be going on continuously, right? Means just like the business of Apple company, the business of Reliance company, the business of Geo, right? The business of, if you talk about the automobile industries like Toyota, right? So Toyota companies got still existed and doing the business continuous basis. So we can assess the valuation of asset and liability. We can justify it. Right? Then accrual accounting, it emphasizes that recognizing the revenue when earned and expenses, irrespective of it receiving, like received or not, paid or not, but recognize it when it's supposed earned and expenses when incurred, either paid or not. These accrual accounting emphasize these concepts emphasize that when the expenses are incomes generate, regardless of their paid or received. Then next convention talking about the matching concept, right? Matching principles means expenses must with the revenue they must match, they generate in the same accounting period, ensuring the financial performance is accurately reflected. And the last accounting concept we're talking about here, materiality, means indicate that only information that is likely to influence the decision of the user should be disclosed, focusing on material events and avoiding excessive detail. Only relevant information should be given in the financial account, irrelevant information should be avoided. Right? Means only and only the information which are you know required for the decision making purposes, right, of the user should be disclosed, and nothing should be avoided. And any kinds of financial information which is required to record in the books of account must have justification. So the owner, the stakeholder can take the decision, you know, impactful decision based on these financial statement. Right. So when talking about this metallurgical safety, it emphasize that relevant information should be pointed out, and excessive information or any information which is not relevant to the stakeholder, not relevant to the books of account should be avoided. As you know, is the era of technology, is the era of AI, is the era of full of competition, like is the era of sophisticated technology, advanced technology. So it is not impossible to perform the task of accounting manually, but it is quite difficult because nowadays business are doing across business firms, business firms or multinational companies doing their business across the world, and every country have their certain rules and regulations. Just like if you talk about the India, we have ICAI, Institute of Chartered Accountant of India, which is what so responsible for issuing various accounting standards. If we talk about American context, they have certain IFRS, they have CAP. In India, we have adopted the concept of IFRS. We need to prepare our books of account. The business, the firms have need to prepare, not need, but required to prepare in accordance with their law, in accordance with the Indian Companies Act 1956, Schedule 3rd, Schedule 3rd, Part 1 and Part 2. The books of account must be in accordance and must be published in the books of account. So manual work of the accounting is not, you know, is it possible, but it's quite difficult to manage. So in order to enhance, in order to save the time, save the cost, number of today software has been developed as well as technology. So it has something meaningful. Impactful presentation, meaningful information we can include. Right? So accounting software and technology have revolutionized the way businesses manage their finances. These tools automate tasks, streamline process, and provide real-time insight into financial data. The use of accounting software has made accounting more efficient, accurate, and accessible. So, out of them, few have been identified, just like the first and most important is the word cloud-based software. So, cloud-based software means these accounting software allows users to access financial data from anywhere, anytime, and allows for collaboration among teams. This has improved accessibility and flexibility. So nowadays, businesses require 24 into 7, 24 into 7 uh, on the basis of 24 into 7 information, right? Or just a click, you need to provide the information. It's the era of technology. It's the era of advanced technology, it's the era of sophisticated, it's the era of artificial intelligence, it's the era of machine learning. So number of software has been developed, and when we're talking about the accounting software and technology, so we have a cloud-based software, right, which through which we can access the financial data from anywhere else at any time and allow for collaboration among the team. For example, Apple company is not in Indian company. Apple is brought from Apple, that which is manufacturing smartphone like laptop, MacBook, iPad, and smartphone. And if you talk about iPhones, we talk about these Apple company, like products of the Apple company, just like desktop too. Apple company is not manufacturing, but Apple company belongs to United States of America. Product ultimately also consumed in India, Lucknow. So here in India, they have multiple outlet, multiple retail area, multiple store. So without any kind of technology, without any kind of software, it's quite difficult for the company, for the employees of the company, just to access the information, financial data, right? That is why software has been developed, right? So this cloud-based software enable the user, that enable the user, enable the employee just to access and work in a team way. Then we talk about the third, the second most important, accounting software technology. Automated process. Accounting software automates repetitive tasks such as data entry, reconciliation, and generate report, freeing up accountant to focus on more strategic activity. So based on these technology, based on this software, automated at its name tell, its name reveal one thing, that automated process, you don't need to repeat the work just like entry, reconciliation, and generate report. Once just click simple, you will get entire things. Like entire books of account by way of just single click will be ready immediately in a very attractive and charming way. So the management can take the decision, the stakeholder can, take the decision based on these report, based on the financial statement, right? On a just single click, these information circulated to the respective stakeholder. Then the third, accounting software and technology, real-time insight. Means this software provides real-time dashboard and report, allowing businesses to track their financial performance and identity potential issues, opportunities quickly. Just click will get the real-time report, right? Means businesses can track their financial performance, which about what about the status of assets, what about the status of the liability, what about the status of the exact report, exact status of sale, purchase, right, across the industries, across the branches. Then another software, or another software has also been developed, which is known as the data analytics layer of AI, as already to have this. That advanced accounting software uses data analytics to identify trends, patterns, and potential risks, enabling businesses to make more informed decisions. Right? Means today, right? You, if you're doing your business, in isolation, so you will know more. In the era of competition, like where you have to external threats as well as opportunities too. So you need to produce the information according to pattern, right? Potential risk you have, as well as enabling business to more informed decision. Means if we're talking about these present era data, software and technology, no doubt this play very crucial roles, but side by side it have also potential risk of leaking information. Number of time we can do that the information of the particular company's information of this the information of the employee can be leaked, right? So it will come full of risk, but no doubt it provide number of, today is it make these very easier of doing. Next, we're talking about the career opportunities in accounting. Every branch is just like, medical sciences, applied sciences, paramedicals, and uh, sciences, just like physics, chemistry. So same way, accounting have also various golden opportunities across the world. So accounting offer a wide range of career opportunities, providing a stable and rewarding path for professionals with strong analytics. For example, accounting, entry-level position responsible for recording, classifying, and summarizing the financial transactions. A simple graduate people can, a simple graduate in the commerce can perform the task of accounting. Means entry-level, just recording, classifying, and summarizing the financial transactions. Then moving towards the financial analysis means based on this information, based on this financial data, right? So you prepare the financial report and make the recommendation to improve the business performance based on this information. So if you here you have also opportunities just how to make the decision informed, right? Use financial analysis of the financial information. Then we talking about the third opportunities you have in terms of auditors may examine the financial statement to ensure there is accuracy and compliance with accounting standard. Means the is an auditor is working advanced, position, advanced opportunities in accounting. Means examine the financial statement in accordance with rules and regulations, right? Means based on what means whether these statement has been prepared with the in compliance with the rules and regulations or not. If not, you have to take the necessary step. Right? The auditor is what just examine the financial statement whether complying rules and regulations. For example, depreciation. Let me take the most important task of the auditor. There are a number of ways to detect the depreciation, right? But as far as the Indian Income Tax Act 1961 has prescribed only one method of you know one method of depreciation, that is the putting written down value method. If the accountant have prepared the books of account and make a treatment of depreciation with by following the straight line method, means every year you are providing the same amount of the depreciation is ultra by the rules and regulations. It is the task of the accountant. Yes, you need to rectify it. So auditor is as an auditor you can also work in this domain. Then tax accounting, no doubt, based on these information, based on the financial reporting, you need to businesses needs to pay tax. It specializes in tax preparation and compliances, advising client on tax strategies to minimize the tax liabilities without violating the rules and regulations. You need to, like, the tax accountant. It is the role of the tax accountant is to inform the management, the companies, that with following rules and regulations you can reduce your tax liability. Similarly, as a management accountant, you have also a golden opportunities in accounting, provide financial information and analysis to internal users such as manager, entities, and department head. Similarly, talking about the controllers who supervise all the accounting activities, ensuring compliance with accounting standards and regulations, and providing financial statements. So these are all the what I have listed here. Some what I have listed here. Some golden opportunities accounting domain, just like auditing, auditor, accountant, tax management, like management accountant, tax accountant, controller, auditor, and many more. So financial statement that have a quick emphasis on balance sheet, cash flow, income statement. Basically, balance sheet is prepared is a report on an organization assets, liabilities, and equity at a specific point in time. Means balance sheet is prepared to know the financial statement, to know the financial position of the company on a specified date. Means if the balance sheet is prepared today, means on 31st. Usually, banks are just closing down their balances, right, on 31st March every year. So on these they prepare their fresh balance sheet, right? Means what about the assets and liabilities? Similarly, the next most important document which enable the users, right, about the revenue, means profit and loss, expenses, and so on. So forth, is known as the income statement, also known as the trading profit loss account, shows an organization revenue and expenses over a specific period, resulting in net income or loss. Then other also important document which is known as the cash flow, which summarizes an organization cash flow and outflow over a specific period, categorized into operating, investing, and financing activities. So accounting information system, data storage, transaction processing, right? Reporting analytics means accounting information AIA system, a software application that automate and streamline accounting process, ensuring ensuring accuracy, efficiency, and timely information. Just a click, you will get information. Now there are technology, now there are AI. So data storage, AI is stored the financial data securely and efficiently. Then this data is processed, means AI automate and record for the processing of the financial transactions. That reporting, AI is generate various reports just like trading profit loss account, balance sheet, cash flow, various types of ratios for the purpose of decision making, just like quick ratio, current ratio, and many more ratios, right, for the purpose of decision making to different stakeholders, because every stakeholder interested to know the financial position, financial result, right, of the company. Accordingly, they can take a decision. And last point is more analysis. Means AI is provide tool for analyzing financial data and identifying the trend. Let me take the example. Let me talk about here the various ratios analysis. Right. The once books of account are prepared, so it is not just going to keep in the lockdown and lock. No, it is what for the stakeholder. You need to tell the outside world that why, what about our financial position, financial performance, right? By way of these statement, right? Financial statement, trading profile sheet, trading profit loss account, income statement. So, analysis by way of tutorial form, you need to tell to the outside the world, to the stakeholder, that what about our previous, okay, amount of previous percentage of these current assets, and what about this future present, and based on this present we are going to predict the future, right? So account cost accounting and managerial accounting, as I told you, cost accounting focuses on tracking, analyzing costs associated with production, while managing managerial accounting uses cost information to make the internal decision about the pricing, resource allocation, and performance evaluation. So cost control, performance evaluation, cost allocation. Ethics and regulation in accounting. The most important things of this accounting in this present era, that most of the business just violate, just you know ultra wide doing the business violating the rules and regulations. It should not be. Means based, you have certain kinds of moral, some kinds of ethics. So ethical consideration and regularity framework are crucial in maintaining the integrity and reliability of the financial reporting. They ensure that accounting professionals uphold professional standards and act with honesty and integrity. Honesty is the best policy. It is one of the oldest saying. So you need to what prepare your books of account, keeping it with a due integrity, with honesty, with due you know attention, with the professional standard. So code of ethics. So ethical guidelines established by the professional accounting standard, right? And surveillance of acts, legislation enacted in the United States to improve the corporate governance and financial reporting. In India too, we have also number of various act, various rules and regulations which enables these for this which enable the corporate form that you need to prepare your books of account in accordance with the rules and regulations. And the third most important ethics and regulation in accounting, international accounting standard board. We have also set up an independent body that set accounting standards used by many countries around the world. So these are what we all are about the ethical and the regulation in accounting. So I hope that after a lot of discussion, no doubt you have certain kinds of question and answer. So here this is about totally an online lecture, right? We have been recorded. So if you have any kinds of questions, doubt, I'm ready to answer at any time, 24/7 basis. So you may also contact me at jnasir4 at gmail.com, or you may my uh, professional email ID jansari at iul.ac.in. You may also contact me on on WhatsApp, as well as you can make a direct call to me on 7618057190. So at the end, after a lot of discussion on accounting, introduction of accounting, I would like to express you know, my deepest gratitude to the listener of this video, as well as also the team, those who have made this lecture possible, as well as say thanks goes to you for your patience, for your listening. So, because delivering online lecture is completely boring, but I understand that the time requirement is era of IT, AI. So thank goes to each and everyone. Special thanks goes special thanks to the students, okay, who are just going to watch this video or just watch this video or just going to watch this video. So thank you so much. You're most welcome from my side. Thank you. Have a good day.